All right, welcome to another episode here at Coffee Shop Startups. Today we're going to be briefly talking about your break-even point. If you are an aspiring coffee shop owner or coffee business owner, we just want to briefly take you in and have a brief discussion about some of the elements that are important to your business. Again, this is brought to you by Coffee Shop Startups. Check us out at coffeeshopstartups.com. We have plenty of free articles and other resources that you can check out and that are relevant to, in my opinion, they're relevant to your knowledge and the development of your expertise in developing your own coffee shop business. All right, so let's get started here. One of the first things that we need to do when we talk about a coffee shop is ultimately discuss your budget, right? And one of the things that I recommend right away is to face your budget head on. Facing your budget, facing your numbers, the data, the money, is all important so that you can empower yourself. Sometimes, most of the time, a lot of the issues revolve around starting a new business. Revolves around the issue of money, right? And so here we are with the ultimate question: is how much money does it take to start a coffee shop? Well, the ultimate thing that we need to do and focus on is you need to talk about your business concept, your menu, your location, your equipment costs. All of that impacts the cost of your coffee shop. I believe that a coffee shop is almost like a wedding, right? So if you were to get married, you would probably ask the question, well, how much does it take to have a wedding? Well, it depends. You can have milk and cookies at the county courthouse for relatively, under $100, or you can have $1 million wedding. It just depends on your concept, on the menu you're planning to serve, your location, and some of the other bells and whistles to your wedding, right? So again, let's move on to the next question: is how much will it take to run and operate your coffee shop business? Whether you have a coffee stand, a kiosk, a full coffee bar, full-fledged cafe, bakery, bookstore, all of those are determined by three things: your estimated sales, your cost of goods sold, and ultimately your startup costs. All right, so the next important question that many people want to talk about, or at least have in their head when they're thinking about starting a coffee shop business, is when will you reach profitability, right? Sometimes it can take you 6 months, sometimes it can take you 6 years. I've known coffee shop owners that have just barely made a profit starting at the 6th or 7th year. However, once that profit starts coming in, they are doing quite well. All right, so again, when you talk about profitability, we talk about our operational day-to-day expenses. We talk about including your pricing strategy. It's really important how much you charge. Is ultimately important for your break-even point and your profit margins, right? So addressing your one-time startup costs, as we talked about before, that's an issue of profitability. Simply because your operational costs are very different from your one-time startup costs, okay? And they can be essentially calculated and interpreted differently when it comes to your accounting. All right, so facing your coffee shop specific startup costs, let's talk a little bit about that. We have your one-time costs, so this includes your furniture. We'll get into some details later, your regular fixed costs, and your variable costs. Let's talk about some examples. Your one-time cost could be your espresso machine. Your fixed cost can be your rent, which occurs every month. These are your fixed costs over the life of your business. Your rent, maybe your insurance premiums every 3 months. Your fixed costs are also your taxes, variable costs. Actually, I should say your fixed costs will be your taxes, but at a certain percentage, right? Your variable costs are your labor costs, your coffee beans that you order, right? The more business you have, the more coffee beans you're going to order, the more money you're going to spend on beans, the more money you're going to spend on labor, all right? So let's jump on to reviewing the elements of some of your financials that you're going to have to get to know. One of the important things is your sales forecast, the cost of your sales, or cost of goods sold, as it's otherwise referred to. Your budgetary expenses, which include your payroll and administrative costs. Once you have these documents and more or less data determined, you can create the following: your income statement, your break-even analysis, your cash flow statements. So a lot of people, the reason I bring this up is a lot of people say, well, how much will it take for me to break even? Well, we don't know that. You need to finally, it's a difficult question to answer without any information, right? You can just throw off a number on top of your head, but when it comes to real analysis, you have to know some pieces of information, and those are some of the things that we talked about, which were your sales forecast, your cost of goods sold, your one-time expenses. Okay? All right, so how do we determine your sales projections? Well, as you know, your sales projections is a very important part of your financial statements, your P&Ls, your profit and loss statements. This is one thing. If you were going to buy a coffee shop, an existing coffee stand or kiosk or business, you're going to want access to someone's P&Ls. Usually they would have a bookkeeper or an accountant or some type of software that would be able to spit out their P&Ls for you or for them to give to you. You want to get a hold of that. At least for the last 2 to 3 years, because you want to be able to have a snapshot, a consistent snapshot that goes back that far. All right. Before we get started on this, let's keep on going here. All right, so let's do a little quick example. Let's say your average sale is about $4.35. All right, so say someone buys an Americano and a muffin, or a latte and a breakfast bar from you, and it averages out to $4.35. You average about, let's say it's a small shop. It's not quite busy, but it's steady. Let's say you have about 12 transactions per hour. Okay, that's about 2 transactions every every 10 minutes or so. You have that for about 10 hours. All right, that's a very, very modest goal. All right, we're just modest numbers. We're not talking, if you're busy, you're obviously going to be spending more. If you're slower, you're obviously going to be making less. All right, so let's plug in the numbers. This is for 10 hours. This is what the equation would look like. All right, you have $4.35. This is your average sale times 12. That's the average transactions per hour. All right, so that's 1 transaction every 5 minutes. All right, so you have that times 10 hours. If that were to be steady, if that were to be consistently steady, you're going to have a gross revenue of $510 a day. All right, this is your sample average. This is just an example scenario, so don't write down in the comments or message me saying that's impossible. This is just an example so that you can kind of get an idea of what your coffee business may or may not look like. All right, so you want to be able to count your expenses. Remember that. Remember, got it. Your first and one-time startup costs. Remember your fixed costs, your rent, your insurance, security, your ongoing expenses. All right, so you want to have that in mind. All right, so let's say that those fixed costs that we just talked about over here. All right, the first and one-time, the ongoing fixed costs like your rent and insurance and security. Let's say those are $120 per day. Okay, we're talking your rent. All of the fixed costs that you can add up. Then you have your variable costs. Now remember, your variable costs are your coffee supplies, your labor. All right, let's say that adds up to $190 per day. All right, so you have fixed costs plus your variable costs equals $310 of your total fixed and variable costs, which if you would do the calculations, it would be $510 in in gross revenue minus $310, all right, which is the total fixed and variable cost, equals $200 in net revenue. That means after everything is paid for, your fixed costs, your variable costs, your labor, your baristas, your coffee, you're going to walk home at the end of the day with $200 in net revenue. All right? So, how does this impact you? All right, well, you got to determine your projected sales. That's something that you need to do. If you have an existing business, you're going to be able to pull that from the existing business's financials, or you're going to have to count customers. I'm not going to go into that counting customers in this presentation. We do write about it a little bit in coffeeshopstartups.com in the blog, at the blog there. Check it out. we also have a detailed, we also have speak more about it in our coffee shop startups kit on how to count customers. All right, so you need to determine your cost of sales. All right, we did that before. We as you can imagine, if we look back, we were able to calculate that into our equation that we just discussed. All right, so this is the next thing you do is determine your break-even analysis, right? All right, so let's start with that. All right, when you are buying a coffee shop from a business, you should, one, ask to see the existing coffee shop sales reports for the last year, up to 3 years, right? You want to count customers, as we just talked about. In the process of your analysis, you should consider a variety of factors, including what is the business serving, which coffee roaster are they using, and what snacks, what are their business hours, how many baristas and staff members do they have, who are their customers, what are they doing right and what are they doing wrong, what are the seasonal factors involved in your business. This is so much information here. I will briefly go through them. But for example, if you buy an existing business and their big thing is waffles, the owner there loves to make waffles. Well, the customers are used to buying waffles there, right? If you decide, well, I'm not going to serve waffles, well, you know that is going to impact your ultimate sales. Your sales will not reach or not be anywhere near their sales because many of their customers have been accustomed to buying their waffles, right? So your numbers are going to look differently. So you got to assess that when you are buying an existing business, whether it's waffles or muffins or donuts, or soup or salad or sandwiches. You got to assess what the customers are already accustomed to, and how that impacts the P&Ls, the profit and loss statements, all the other financials that you will be seeing, or at least that you should be asking for. What are their business hours? Maybe they have extended hours. Maybe they are, burning through, $100 a day on wasted labor costs simply because their hours need to be tweaked. You got to look at that as well, right? Maybe they have 1 or 2 baristas on staff at the same time that may be also burning some cash, and again, you have to understand who their customers are, because those customers are eventually going to be your customers. All right, let's go into further detail. All right, let's just use that example that we just talked about a few minutes ago, of about $510, and let's just use that as kind of a ballpark figure for this next example. All right, let's say your average daily sales for a small coffee shop are derived from the following weekly sample. All right, Monday you have 600. You make 600 in gross revenue. Tuesdays is 575, 625, and so forth. All right, so let's say you're closed on Sunday. All right, so this would bring the total to $3,700 per week. Right, you add up those numbers, and you got about $3,700, or about $14,800 per month, or about $180,000 per year. All right, $177,000 to be exact. All right, or $177,600 to be exact. All right, so again, going back to that previous example of total fixed and variable costs, let's just say that we're using the same numbers here for $310 of total and fixed, total fixed and variable costs. All right, so that's $300 times 6 days a week. All right, so it's $1,860 for your fixed and variable costs. That's what it's costing you per week. Plus, okay, this is very important, plus your fixed daily cost for Sunday, because the rent, no matter if you're not working or not, the rent, the utilities, the costs are still ongoing. You still need to pay that rent for Sunday even though you're not working, right? So let's just assume that it costs $120 every Sunday for you to remain closed. All right, so we add all that up. It becomes a weekly total of $1,980 for total weekly costs, or $79.20 per month. All right, so let's say it costs you $36,000 to start your coffee business. All right, and this is done from a previous video. We're using the numbers from our previous presentation webinar that we had. You can check that out as well. But let's just say it costs you $36,000 to start your coffee business. Your revenue is $1,480. and the costs are $79.20. This is per month, right? So so your startup costs, as we determined in the previous video, is $36,000. Well, so what's left over, right? So your revenue minus your costs, you have $6,880 left over in essentially a margin, your profit. So if you were to use that to apply to your startup cost of $36,000 that we discussed in the previous video, that would average out to about little over 5 months for you to break even. Now that's going textbook here. That's like if there's no problems, there's no other expenses, there's no other surprises. That's what it would take for you to break even if you applied every single penny of your margin towards your startup cost of $36,000. Now that always doesn't happen, right? Sometimes you have to pay yourself. Sometimes you have to, buy a new piece of equipment. So again, you have to be careful with these numbers. These are hypothetical numbers in theory. But in theory, in this scenario, and using the scenario from our previous video, it would take 5.2 months for you to completely break even. All right. So with that, I want you to also be familiar with these pro forma balance sheet statements, these pro forma income statements, because these are all estimates. Pro forma financials mean that they're estimated financials. All right, so you can check those out. I won't go into too much detail in this video, but you can look at that on your own. You can look at your pro forma income statements. We detail it on the website and in our Coffee Shop Startups Kit. And here it is. We offer an interesting streaming video, audio, I should say, not video, excuse me, of several important audio interviews that you should hear before you start your business planning. These are excellent interviews from business experts, coffee shop owners, and people who've been in the business for a very long time, and they offer their assessment and their recommendations for new aspiring coffee shop business owners. Check it out. Thanks a lot for listening. I appreciate it.